What did it say? Rotate my phone. Girl, what? Hey everybody, this is Talitha with Keller Williams. I'm doing a live feed of our webinar, TR Royalty, Talitha and Rashonda with Miss Lucretia Ballou, owner of B&B Mortgage. We're going to be talking today about what's going on in the market now, what kind of adjustments, what changes have happened during to our current situation. So, if you have any questions also, just go ahead and comment with a question. We'll try to answer your questions in the comments. Alrighty, let's get started. So again, we are TR Royalty, Talitha Pitre and Rashonda Shillow. And we are agents with Keller Williams Realty Lake Charles. And first we're going to discuss the changes that we're doing as real estate agents to adjust to the market. And then Ms. Lucretia Ballou will discuss the mortgage and the lending changes that are occurring in the market. Alrighty, so one of the things I want to discuss is the market inventory. Okay. I did an inventory just for the whole SWLA board. It's Calcasieu Parish, Cameron Parish, most of Jeff Davis Parish, some of Allen Parish, and Beauregard Parish. And I did it for residential homes because that's, what sells mostly. So in the past 12 months, we've had 2,528 sales. And the current number of active listings of residential is 1,103. So the average monthly sales, which you divide by 12, you get 211. So we average 211 sales of residential properties per month. And with doing those calculations, we pretty much, if nothing else was added to the market, we would have a 5-month supply of homes, which actually is still kind of a shortage. Anything less than 6 months is considered a shortage, so it's more of a seller's market. Now, I'll do more calculations in the next couple of weeks to see how things have changed since this coronavirus lockdown has started. Also, this is what we're doing to adjust to the market. We're doing virtual tours. We are FaceTiming, showing. So we'll go to a house. We'll FaceTime a showing. We'll video it so you can see it. A lot of homes have sanitation stations. They'll have a little spot for Germex or Lysol. And also, what a lot of people are doing is they're leaving all the lights on in the house. So that way you don't have to go into different rooms and touch switches. They're already on. And then we already did electronic paperwork. We just continue to do our electronic paperwork. So we don't have to meet in person. Everything can be done through the computer or email. And also our video consultations. Normally we do buyer consultations face-to-face in our office. We'll do them through Zoom. And our buyer consultations are what we do to sit down with you and figure out exactly what it is that you're looking for in a home. Come up with a strategy to find you the best house for the best price. Okay. So, Rashonda, you have anything you want to add?
No, just that we're continuing to serve our clients with the same high quality, if not even better, because we have more time to definitely directly focus on everything. Everything is like slower paced, but we are still out here serving our clients. We're definitely able to guide you start to close, continually to take care of the negotiations, all of the paperwork. We're still able to set up inspections as normal. We're still managing and meeting most of our deadlines. And we have kept up with some of the lending changes, but we did invite Ms. Ballou here because she is an expert in her field, and she's able to give us the actual changes that's been made to lending and answer the questions that you also may have.
So you go ahead, Lucretia. You can start your presentation.
All right. What I'm going to do first is share my screen. You guys let me know if you see it. Okay. Can you ladies see my screen? Not here.
It's coming.
Okay. But while we're waiting on it to come,
course, there have been a lot of major changes when it comes down to the lending side ever since the COVID-19. And every lender, they are all changing their guidelines when it comes down to government overlays or changes. But this particular PowerPoint presentation that I'm giving, this is pretty much standard across the board with all of the lenders. And you guys are going to be amazed with all of the changes and how it's going to affect you as realtors as well as your buyers. With that being said, let's see here. Can you guys see my screen?
Yes.
You can.
Okay. What? Well, I guess it wants to move a little bit slow for me. Let me go here. All right, ladies, it looks like it wants to stall a little bit, but I'm gonna get it. Let's see what it's doing. And of course, while we're waiting on the screen to go to the next presentation, most of the changes have taken effect March 27th. So say for instance, you had a client that you were working with that has been pre-qualified prior to March 27th. Well, you definitely want to go to your client and tell them, hey, you need to reach out to your lender and make sure you meet all of the new guidelines that was effective March 27th before we start shopping, looking at homes, and putting you under contract. Because of the changes, they may not qualify. And I don't want to say that, but that's reality of it all. Okay. Well, ladies. Hold on.
But while you're getting the computer straight, I'll just reiterate again. You know, if anybody got on later, we are making changes. To real estate agents, we're doing pretty much everything by computer, video showings and everything. Also, most lenders, and definitely I know B&B Mortgage, they have online applications, and you can submit all your paperwork through email or through their website. So we have it set to where you don't have to leave your house to get pre-approved doing the lending thing. Pretty much, if you like, if you have a home you want to see, we'll go video it for you, and then you let us know if it's something that you would like to take to the next level. But it's just a lot of adjustments, and the market is still moving. Homes are still being sold. People are still putting houses on the market. So it's a lot that people can be worried about, but the market is still moving. We're still working.
Title companies are also making changes and making everything safe for us to even attend closings. So that hasn't stopped either.
Right. The last closing I went, everybody had to use hand sanitizer, and we couldn't sit too close to each other. Some of them have separate rooms for the buyers and the sellers, so everybody's making adjustments.
Yeah. Okay, ladies. Now, can you see my screen?
Yes.
I had to stop the slideshow to make it work.
Yeah, we're good now.
With that being said, due to the ongoing impact of COVID-19 causing volatility in the markets and difficulty in underwriting credit risk, most lenders released the following changes effective with submissions on or after March 27th. So that's what I was talking about, is that, of course, a lot of times you have your client that's pre-qualified, and most of them probably were pre-qualified before March 27th because their pre-qualification is good for a few months. But with that being said, they definitely need to go to their lender to make sure they are meeting all of the new guidelines that have taken effect March 27th prior to going under contract. Now, the four major changes to the government loans has to do with the credit score, the debt to income ratio, your assets, and your income. Now, please slow me down if I start moving too fast. When it comes down to the credit score on government loans, the minimum credit score FICO used to be 580 for you to be able to qualify for a VA or FHA loan. With USDA loan, it used to be 600, but being due to the COVID-19 as well as the interest rates and everything that's going on in the market, the minimum FICO has been increased to 640 for all FHA, VA, and USDA loans. Another thing is that loans with FICOs between 640 and 659 and using gift funds, they have other stipulations when it comes down to gift funds, because gift funds could be used even if you were below a 640 credit score. You could be anywhere between a 580 and a 640 credit score and use gift funds, but you only needed to have at least 3 months of reserves, payment reserves. With that being said, due to the changes, if you're using gift funds to purchase a house going with an FHA, VA, or USDA loan, you're required to have 6 months of cash reserves or residual income in excess of 120% of VA requirements. So whenever I say 6 months cash reserves, that means whatever your estimated mortgage payment is, say for instance it's estimated at $1,000, you have to have 6 months of reserve. So you estimate that you multiply that 1,000 times 6 months, and your client is going to need an additional $6,000 in their account for payment reserves if they are going to receive a gift towards their down payment requirement. Now remember, that's if they are in between a 640 and a 659 credit score. But across the board, for FHA, VA, and USDA, your client has to have a minimum of 640 credit score. Another thing is that there's
plus the down payment.
So when it comes, a lot of people, they have 401ks, retirement plans, things of that nature. That can also be considered an asset. So that could be qualified as cash reserves. Even though they're not removing their money out of their 401k, they may have a couple of thousand in their check-ins and savings account total, and they may have $50,000 in their 401k. Well, they definitely want to list that as an asset, and the reason being is because listing that as an asset, that would possibly meet their 6 month cash reserve qualifications. So always let your buyers know if they have a 401k, they don't necessarily have to withdraw money out of it. Just use it as an asset and verify with a statement that they do have that money, so it's considered reserves. Any questions?
No, that's good. And they have to have that for 12 months. You said that already, huh?
6 months.
6 months. Okay, I'm sorry.
Yes. When it comes down to the FICO, another factor is that change is manual underwriting for loans now require a minimum 680 FICO. It used to be 580. Sometimes a person can have a 620 and have to do a manual underwrite. But to do a manual underwrite, you have to have a minimum of a 680 credit score. And whenever a manual underwrite is done, most of the time you have to verify 12 months of rent as well as have 3 months of reserves. But most likely, if you have to do a manual underwrite, and that means we as the lenders, the brokers, we didn't receive an automated underwriting approval, and it comes back for manual underwrite, a 680 is the minimum credit score. So there's no more 580 to a 679 credit score that can go with the manual underwrite.
Lucretia, can you explain what manual underwriting means?
Well, manual underwrite is that what happens is when we're working on a loan itself, we use an automated underwriting system. Okay. There's a few out there. You have the Fannie Mae automated underwriting system. You have the Freddie Mac underwriting called Loan Prospector. But we plug in all of the information in the application. Once we run it through the system, it will give us an automated underwriting decision. Okay. So it would say if someone is approved eligible and what are the specifications, that the documentation that's required. But if we don't get an automated approval, then we have to go with a manual underwrite. And therefore, when you have to do a manual underwrite, then there's more factors that's involved. Okay. You didn't get approved electronically per se. Does that make sense?
Yes.
Yeah.
So an underwriter has to actually look at the file thoroughly and request different things such as verification of rent for the last 12 months. If a person can't verify 12 months of rent, they may request a credit supplement, a non-traditional credit supplement, something like auto insurance for the last 12 months, utilities, things of that nature, so that a person can still qualify for a home loan. But now they have increased the minimum score to a 680 to be able to go a manual underwrite versus an AUS, an automated underwriting system approval.
Okay.
Did I answer your question?
Yes.
Okay. So we're going to move forward. The next change that we're going to discuss is the maximum debt to income ratio, DTI. And you see right there where it says per AUS, that's what I was just speaking of, the automated underwriting system. Loans with debt to income ratios greater than 50% requires a minimum 700 credit score or 6 months reserves. It used to be across the board, depending on the credit score. A person, they could have a 600 credit score. If they had the assets behind them, they could go up to a 55% debt to income ratio. Well, now the guideline has changed. You have to have a 700 FICO to be able to go above a 50% debt to income ratio. And if you don't have a 700 FICO score, you have to have at least 6 months of payment reserves in your accounts for your assets. So it's either or, a 700 credit score to go above a 50% debt to income ratio or 6 months of payment reserves and assets. The next one is with a DTI greater than 45% and the FICO score is less than 660, requires 6 months cash reserves. And the thing about it, that you would be speaking of the FHA as well as the VA, because USDA is 45% debt to income ratio across the board. So I'm speaking of a FHA or a VA loan. But 6 months cash reserves, if you are less than a 660 credit score or residual income in excess of 120% of a VA for the VA loan. And of course, the manual underwriting loan now requires a maximum 45% debt to income ratio. So even if they're going with an FHA or a VA loan and their debt to income ratio, it cannot be, if it's a manual underwrite, because remember how I was showing that a manual underwrite, you have to have a minimum of a 680 credit score. Even if you have a 680 credit score, if it's a manual underwrite, you cannot go above a 45% debt to income ratio. And what people need to understand whenever we say the debt to income ratio, what that is all your monthly obligations that's reported on your credit report plus your projected estimated mortgage payment. That makes up your debt to income ratio, and it cannot be over 45% if it's a manual underwrite. Any questions on the debt to income ratios?
No.
Okay. So we're going to move forward. Another major change when it comes down to the government loans is assets. What it says is that if reserves are needed for any of the requirements herein, the asset statement must be dated within 30 days of the note date. So what that means is, because I know a lot of buyers, they say, for instance, they get settlements and things of that nature, or the money wasn't there and they're trying to put the money there while they're under contract and getting the deal done. Well, you must have it, the assets must be verified in that account within the last 30 days before the loan can close, is what it's saying. You can't wait until 10 days prior to the note date and deposit the money into your account. You have to verify that you've been having that money as assets within the 30 days of the closing. Does that make sense?
Yes.
Okay. And the last major factor when it comes down to the government changes is income. I know there's a lot of self-employed buyers that's out there. So this is definitely important for your self-employed or 1099 independent contractors. It used to be that we could use 100% of your income that you claimed on your tax returns. for the last 2 years, but now that has changed. Income will be reduced by 25% to account for disruption in the business unless the borrower can document 12 months of reserves. So what that means is that whatever your average is for monthly within the last 24 months, instead of us using 100% of your income, now it's dropped down to 75% unless you can document that you have 12 months of reserves in any or all of your accounts. So it's either or, 75% or 100%, and you have 12 months of payment reserves. So those are huge changes that affects a lot of buyers, and not just buyers, but real estate agents and lenders and brokers across the board. And we have to find a way, we have to be creative and find a way to where we can really truly help our clients be able to still qualify and be able to move forward with the purchase. Now, is there any questions that you guys have for me?
The interest rates, are they going up or down or staying the same as far as you can tell?
They're staying the same, but whenever you ask that question right now, the interest rates, it's almost like it's the stock market, because it's changing periodically throughout the day. It could change about 5 times right now. I know a lot of people, they were extremely excited whenever they heard, okay, the president, they dropped the rates to 0%. The thing about it is that no one is going to qualify for a 0% interest rate. It's a good thing that it would drop down because it does help the buyers, and it does help people that currently own their homes when it comes down to refinancing. But the interest rates, they are great, depending on, because of course there's factors when it comes down to the interest rates. It's based on your credit score, the loan amount, the loan product, your debt to income ratio, things of that nature, to be able to determine what your interest rate will be. But right now, the interest rates are phenomenal. However, being that the interest rates are phenomenal right now, and the volume for all lenders have increased, which means whenever the volume increased, the workload on all of the underwriters, the processors, the loan originators has increased as well. So their pipeline is extremely full. And whenever you got a full pipeline and you have loans that's just continuously coming in, it's going to take a little bit longer to get these loans closed. Therefore, right now, most of your lenders and banks are saying it's either you don't lock the interest rate until you actually have a clear to close, or if you're going to lock the interest rate, you want to lock the interest rate 45 to 60 days instead of 30 days, because now it is taking about 45 to 60 days for a loan to close. Due to
I hope the buyers are listening. 45 to 60 days to close versus 30 to 45 before coronavirus.
That is correct.
I know I did ask about the rates, but the lowest rate, like you said, won't be 0%, but are we still looking at what, 2.99 possibly, or what's the lowest you've seen?
The lowest I've seen, and see, that's hard for me to actually throw a number out there. I did have a client that qualified for a 2.875.
Okay.
That's the lowest I've seen.
So that's pretty good.
That is really good.
Yeah.
But remember, there's factors that's involved when it comes down to the interest rate, because if you're looking at somebody if somebody has a 640 credit score, and another thing is that a lot of the lenders, they used to do loans under $100,000. Well, now some of them are not even doing loans for under $100,000. The minimum loan amount is $125. Some of them, not all of them, but the loan amount plays a factor too. So if you're sitting with somebody with a 640 credit score, the loan amount is $120,000, and their debt to income ratio is a little bit higher. Well, guess what? Their interest rate is going to be higher than the person that has the 700 credit score that's buying that $290,000 or $250,000 home.
Okay.
So just always remember those 4 factors: credit score, loan product, loan amount, and debt to income would determine what interest rate your client qualifies for.
Okay. Well, that's some good stuff.
Yeah, it is.
Yeah.
And I'm thinking, do people need to understand that debt to income is just as important as your credit score?
Yes, it is.
Okay.
And
And
having
being that they
the-
did change that when it comes down, because remember, just the beginning of March, people could go up to a 55% debt to income ratio with a 600, possible 600 credit score. With a possible 600.
Wow.
Right now, we changed. With a minimum 700 credit score,
Yeah.
you're going to have either that or 6 months reserves to go above a 50%. Not even touching a 55, but just to get to 50% debt to income ratio.
Yeah.
So those are huge changes.
Okay.
And what I'll do is I'll make sure that I send you ladies a copy of the spreadsheet,
Mm-hmm.
the presentation, so that if you have any real estate agents or any of lenders, somebody that needs that information, it'll be readily available.
Okay. That sounds good.
Appreciate.
Thank you again. Yeah, thank you again, Lucretia. And I said, we just trying to get information out so everybody is informed, you know, knowing how to prepare. You know, if you're thinking about buying, what you need to do, start saving up. Really pay attention to your credit. I did want to ask you this, Lucretia. How would things like, say, like people delaying payments? Maybe you'll know, like, say, like the student loan deferment, pretty much, I think they said to like September, you don't have to pay with 0% interest rate. Will those things affect people's credit?
It should not.
Okay.
No. And I know a lot of people have already been notified of logging into their accounts to make payment arrangements and things of that nature, and they are specifically saying as soon as they go in, you're not required to make a payment, and we are taking care of everything, and we will not report you 30-day late. Now, if a person wants to and they're in a position to make the payment, I would suggest them go ahead and make the payment so that they don't have to worry about that interest, even though it's 0%, but certain things to accumulate.
Okay.
But yeah, they don't have to worry about it. It's not going to be reported as a negative on their credit report.
Okay.
Now, when it comes down, because I know several people has reached out to me as far as should I, during the crisis right now, the COVID-19, being that my income has dropped, should I defer my payments because they're current homeowners? Should I defer my payments? And I'm going to always direct them directly to the lender because those guidelines are different as well. I mean, some lenders may come back and they say, okay, well, we'll allow you to defer your mortgage payment for the next 3 months. But after those 3 months are up, you have to pay the lump sum of those 3 months of payments.
Which they're calling a forbearance, right?
Hmm?
They're calling that a forbearance.
Yes.
Yeah.
Because you got the forbearance, you have the deferment, but every lender is different, and everybody wants to reach out to their lender directly to find out exactly what they're offering when it comes down to skipping a mortgage payment or extending.
Sounds good. Well, thank you, Lucretia. We really appreciate it. Like I said, TR Royalty, we will continue to give you updates on what's going on and what can help you. Again, in the post, I'll put Miss Lucretia Ballou's contact information, so you can reach out to her. And then I also put our contact information. So thank everybody for joining us, and just stay safe. Y'all have a good one.
Healthy.
Yes.
All right. Y'all have a good day.
Bye
All
bye.
right, ladies. Y'all too.
Bye.